You're changing jobs, working at a new company, or maybe have even made the huge decision to retire. It may be an exciting time, but it can also be a very stressful time. On top of dealing with a new office location and culture, you may be dealing with a new home location. You certainly have some important financial decisions to make on top of it all. Among them is what to do with the 401k account you have with your former employer. Let me help you make your options a bit clearer and possibly simpler. There are 4 options for your consideration. Most employees make this decision, but it may be exactly the wrong decision to make. First problem is taxes. When you take cash distributions from your 401k account, you pay a lot of money in taxes and in penalties. This includes a 20% federal withholding tax and then another 10% penalty tax for people who are under the age of 59 and a half years old. That might not be the end of it. You very well could end up owing even more than that come tax time the following year. Talk to your tax advisor before choosing this option to be sure you know what the tax consequences might be. Here's another major problem with this option. On top of losing a significant amount of your 401k balance to Uncle Sam, it also means you're essentially starting over in your efforts to build a retirement plan for yourself. This can set you back years. You were disciplined and worked hard to save up what you have so far. It can be very frustrating and difficult to make up for such a significant setback. Now, the one advantage of this option is that after paying the taxes and penalties, you do have immediate access to the remaining funds to help with any true financial emergency you may be experiencing. Unlike option 1, a rollover will not cause any extra taxes or penalties, and you won't have to start over in your retirement savings plan. An individual retirement arrangement account is much like a 401k, but it can remain independent of any employer. It also allows you to remain in complete control of your financial future. One possible problem to consider with this option is that IRAs are subject to required minimum distributions if you are over the age where these become required. Whereas leaving your assets in your company 401k may help avoid that requirement. Some 401k participants prefer to keep rolling their 401k savings forward. You may want to consider this option if you mostly work corporate jobs with good 401k plans. Rolling the money over directly from one employer to the next will avoid paying any extra taxes or penalties. But be careful. Many new employees incorrectly assume that this option is not available until you are eligible to contribute to your employer's retirement plan. However, even if you aren't qualified to contribute to your new 401k through payroll, you may be already able to roll over your old 401k into the new retirement plan with your new employer. If you have at least $7,000 in your old retirement account, your employer must allow you to retain your 401k account if you want to. You can no longer make contributions to the account, but you can make decisions regarding the investment of your assets. This option is definitely the easiest, and then it requires you to do nothing at all. Also, if you leave your old job at age 55 or older, you may be able to take penalty-free withdrawals. You'll still pay the income tax on the withdrawals, but may be able to avoid the 10% penalty. However, it would be wise to ask yourself, is the company in financial trouble? What happens to your retirement plan if it goes under? Is the HR department run efficiently and competently, enough to keep track of me? What if I move? Will my old employer be able to track me down to advise me on any changes to the plan? What if I don't agree with the changes they make to the plan? Am I comfortable understanding that as an ex-employee that I'm maybe out of sight and therefore likely out of mind? Of course, at Hesed & Haslam, our team helps clients to navigate these and other important decisions that impact their economic future. Feel free to give us a call or send us an email, and perhaps we may be able to help.